Welcome to Nonprofit Times TV. I'm Tamara Falansky.
And I'm Randall Mauricio. Mergers and alliances are hot right now as nonprofits reach out to like organizations in an attempt to keep the doors open.
And we have an interview with national expert Thomas McLaughlin on the trend. But first, some headlines.
Mailing fundraising appeals to cost more.
Quick, ask for that second gift.
And many Americans remain hungry.
It's going to cost more to send fundraising appeals starting April 17th. The United States Postal Service is increasing rates across the board, an average of 1.74%. The rates will take effect almost 2 years after the Postal Service last raised prices. The increase is based on a price cap calculated by the Independent Postal Rate Commission using Consumer Price Index data. The Postal Service hopes to recoup its loss of $456 million in November 2010, an overall loss of $6 billion last year, and pay off some of the $5.4 billion owed to retired workers.
A study of more than 100,000 donors shows you probably shouldn't wait very long before asking for a second gift. Fundraising firm Emergent in Peabody, Massachusetts shows that the sooner a donor can choose to make their second gift, the better it is for their long-term revenue potential. The study shows that if a donor makes an additional gift within 60 days, their revenue per donor of $86 to $97 is almost twice the value of those making one gift per year of $45. According to the Emergent study, the closer the proximity of two gifts, the better.
The recession may be waning, but millions of Americans are still hungry. Some 94% of Salvation Army Food Service programs saw an increase in requests for food assistance in 2010. Nearly two-thirds of programs experienced an increase in demand of 15% or more. The problem is that nearly 60% of Salvation Army programs saw donations remain flat or decline from all funding sources, including government, public, and private sources. A food program surveyed, 55% reported that their shelves were half full or less. On the more hopeful side, 36% of Salvation Army programs saw an increase in donations, and 23% of programs reported an increase in volunteers.
The Wounded Warrior Project has won its battle against a sound-alike charity. In a 19-page decision, the U.S. Court of Appeals for the 8th Circuit of Nebraska knocked down 6 alleged key errors in the original case raised by the Appeal by Wounded Warrior Family Support, or WWFS. Errol Koppelwitz of the Kansas City, Missouri firm Koppelwitz & Cantor, who represented Wounded Warrior Project, says in September 2009, a jury awarded $1.7 million to Wounded Warrior Project of Jacksonville, Florida, and entered a permanent injunction against WWFS.
Even though the recession is ebbing, many nonprofits are struggling and reaching out to others in the sector for possible affiliations. We caught up with Thomas A. McLaughlin, Vice President of the Nonprofit Finance Fund and author of the new book, Nonprofit Mergers and Alliances. Hi, Tom.
Hi, Tamara.
Some think developing a nonprofit is an entrepreneurial action. There are other leaders in the industry who believe collaborative action, such as a merger, is the future. Now, how do you decide which philosophy is correct for an organization?
The way you decide which approach to take is by the nature of the need you're trying to speak to. If the need is new and or ill-formed, not yet fully understood, for example, the approach that you would be likely to take is a strictly traditional entrepreneurial approach, aiming for linear growth, at least in the beginning. On the other hand, if the field is more mature and established, the need is clear, and so is the response, innovation is not as important, and as a result, a merger approach will probably be better.
Capital markets are starting to loosen. There is a pool of eager workers among the ranks of the unemployed. Now, how do these impact operations for the next 12 to 24 months?
This really speaks to two types of capital, financial capital and human capital. If, in fact, capital markets are loosening and there'll be more availability of capital, it means that in the short term, it will be perhaps a good time to expand fixed asset holdings or even using some of that newly available capital to assist with cash flow. Particularly with fixed asset purchases, there may be an opportunity early on to take advantage of what's likely to be a lull between rising interest rates and the rising property rates that are likely to follow. So it would be a good time shortly after capital starts to loosen and be available to make those kinds of investments. On the human capital side, by contrast, this is always going to be a good opportunity for this sector to add people with new experiences, different ideas, and different approaches. That kind of human capital can't be measured, and this may well be, for the next 2 or 3 years, an opportunity to add folks with different kinds of experiences and knowledge to your already existing talent base.
To watch our full feature story, click on the banner right below this video player.
That's right. Thanks for joining us today. Let us know what you think of NPT TV by commenting below.
And you can share NPT TV with colleagues by clicking on the icons on this page, and we'll see you in 2 weeks. Take care.
See ya.